I'm Dr. J. You're going to be hearing from Mr. Top Step in a second. Mr. Top Step is called Top Step because the very top ring of that pit, that's where the biggest traders stand. You want to know what they're doing, you got to watch Mr. Top Step.
All right, we're here from the floor of the CME Group. Tim Hefke back from Top Notch Trading. Oh, I put out an idea about 3 weeks ago, probably a month and a half ago, about this gap seal I was looking for in the S&P, and we also had one in the Dow. Well, I'm going to stick with what I do best, and that is the S&P. There was a couple good things that happened, but we did take a couple lumps on the way as we tried to figure out what the S&P had to do. Anyway, 16th of November was a Monday. That was the first day that the gap seal price of 1108.30 was violated, making a high of 12.10 in the process. But by the end of the day, we made a settle of 1106.20. The recommendation was to be shorting 1108.30 with a stop at 12.10. If this theory works, as Top Notch Trading puts out, a 3-to-1 ratio is needed. So with a stop price of 12.10, which was about 4 handles, we needed to make 12 handles in that trade to verify the overall idea. So 3 days in a row, we are still short at 1108.30. We never got stopped out. Then on Thursday, as a matter of fact, though, on Wednesday was the first day we settled above 1108.30 at 1108.5. Warning shots were fired. Now we're either going to get stopped out or we're going to make our 12 handles. We opened up Thursday, they pulled the rug out, they went down to 86.5. The recommendation was to cover 96 evens. We made 12 handles on half the shorts. Good trade. We're still short with the rest of them at 1108.30. Now what we're looking for is that breach of 1082 even. Friday comes, 85.20 is the low. We lower the remainder, stop in at 98 so we can lock in another 10 handle profit on that trade. And overall, we ended up getting stopped out, but we made 22 handles. What's wrong with that? We did see a violation of that 82 handle anyway on Friday the 27th, but that was because of what happened in Dubai. And they put this idea on the back burner. Everybody thought, oh boy, it's time to short them. Never had a chance. We come in and make a low of 77.5 on the regular session that Friday with a low of 66.90 on the previous Globex night trade. Tough to decide what happens. So we come in this week, what did we see? We activate stops at 12.10. The market took them up initially, and now we're seeing some consolidation here. Also, we found stops at 1802 even in the NASDAQ. That's another story. Now, we're looking, the last time we did settle above 1108.30, we did see a pullback. So what happens? We settle above 1108.30 yesterday with a settle of 1108.40. I'm talking too fast. Anyway, we did see a break the last time. Today we saw an extension. But I see today, if we can take out this current low of 730, followed by 5/4, bet you bottom dollar we have a chance to see 96 to 92 today. That's one day at a time. But one of the biggest important issues that's going on right now comes with this end of the year expiration and into the roll. Granted, back in March, when they hit these things hard and we made those lows from the all-time highs, there was a considerable amount of open interest lost. So if we want to verify this current run-up and validate it, we need to see some open interest come back. And slowly but surely, since the March roll to the September roll, or June roll, September roll, now into the Dece roll, we are seeing signs of life in that open interest. And if it still continues to climb, we're probably going to see a further move higher in the S&Ps. Let's see what happens, and I want to see if the S&P can take out 1105 quarter today. That's on the mini. Good luck, and we'll see you later.